Welcome to the Deep Dive, where we get straight to the insights you need. Today, wow, we've got a real head-scratcher from the market.
Oh,
Oracle.
that Oracle, yes.
They just posted this massive after-hours surge, right? September 9th.
Yeah.
We're talking 23%. Incredible.
Absolutely huge jump.
But here's the kicker, and this is what makes you, pause. It happened, even though they missed Q1 estimates. Just slightly, but still.
Yeah, EPS was off by a cent. $1.47 reported, $1.48 was the estimate. And revenue too.
Revenue, right. $14.93 billion reported against a forecast of, what, $15.83 billion? So technically, misses on both counts.
Technically.
So, okay, slight miss.
Yeah.
Stock goes absolutely nuts, up 23%.
Yeah.
How does that work? What did the market see that just completely overshadowed those misses?
Well, that's exactly what we're diving into.
It feels like a paradox we need to unravel.
It really does. And our mission today is to unpack this reaction because, honestly, it tells you a lot about how tech is being valued right now. It's all about the cloud.
And AI, presumably.
And AI, exactly. These huge forces are just reshaping expectations. So we'll dig into the numbers, what analysts are saying, and, what it all means going forward.
Okay, let's nail down those numbers again, just to be clear.
Sure.
Q1 EPS, 1.47 designs. Revenue, $14.93 billion. Both technically misses.
That's right. On paper, misses.
Normally, you'd expect maybe a flat response, or even a slight dip.
Usually, yeah. Even a small miss can trigger some selling pressure. But here, it's like the market just shrugged it off completely.
So what did they latch onto?
It was all about the forward-looking story, the guidance. Oracle came out with incredibly bullish forecasts for its cloud business.
The future potential.
Exactly. That, combined with their positioning in AI, just blew the current quarter's numbers out of the water in terms of investor focus. It's a prime example of future potential trumping current performance.
Right, so it's a lesson for investors, really. It's not just about the rearview mirror.
Precisely. It's about the windshield, what's coming down the road. Especially with these massive shifts like AI, investors are trying to figure out who's building the infrastructure for that future. They're asking, where's the growth going to be?
And Oracle's answer seems to be cloud infrastructure. I saw that forecast. 77% growth projected for cloud infrastructure this fiscal year.
77%. It's a staggering number. Expected to hit around $18 billion.
Just this year. That's explosive growth. But, some might say Oracle's made big promises before. What makes this different?
That's a fair point. Skepticism is warranted given past history sometimes, but what adds weight this time is the sheer scale of the long-term ambition they've laid out and the market context.
Okay, go on.
It's not just the $18 billion this year. They're talking about a trajectory, $32 billion next, then $73 billion, $114 billion, hitting $144 billion in 4 years.
Wow.
These aren't just aspirational numbers culled out of thin air. They reflect a huge strategic bet backed by investment on where the entire industry is heading, cloud-native, AI-driven. And crucially, the market needs this capacity.
And the why behind this, the drivers.
Yeah.
It's AI workloads and multi-clouds, right?
Absolutely. The demand for computing power to train and run AI models is just insatiable. We see it everywhere.
And companies aren't just using one cloud provider anymore.
No, increasingly they're using multiple clouds, maybe AWS for some things, Azure for others, and, Oracle Cloud Infrastructure, OCI, for specific high-performance or cost-sensitive tasks. It gives them flexibility, avoids lock-in.
And you've got proof this is hitting Oracle specifically.
We do. Analyst checks are showing that customer AI provisioning, basically, companies setting up AI work on Oracle's cloud, it jumped from just 4% in January to 27% by June.
4 to 27% in 6 months.
Yeah. And their goal is 50% by the end of the year. That's not just a gradual trend, that's like a rocket ship taking off. It shows AI adoption is accelerating fast within their customer base.
And didn't we see some big headlines confirming this? The OpenAI deal?
Exactly. That huge $30 billion OpenAI contract was a massive validator, $30 billion. Plus the Stargate project, this giant expansion for AI compute capacity.
Right.
And you saw the ripple effect, didn't you? It wasn't just Oracle's stock that jumped.
No. NVIDIA, AMD, CoreWeave, even all those AI-related stocks shot up too.
It shows the market is buying into the whole AI infrastructure narrative, and Oracle is now seen as a key player in providing that foundation.
Okay, so the growth story is compelling. But you mentioned digging deeper, looking beyond just the revenue forecasts. What other numbers are backing this up? What are these surprise factors?
Right, because you need more than just projections. A key one is RPO remaining performance obligations. Think of it as contracted future revenue.
Money already locked in.
Pretty much. And Oracle's RPO is now $138 billion. That's up 41%. It gives investors a huge confidence boost because it signals strong, locked-in demand for years to come.
$138 billion, that's a big backlog.
It's massive. Then you look at their core business cloud services and license support. Still very strong. $44 billion in revenue, up 12%. That provides a stable base.
Okay, solid foundation.
And their operating cash flow is healthy too, $20.8 billion, also up 12%. So the core business is generating the cash they need for these big investments.
Which brings us to CapEx, capital expenditure.
Exactly. For fiscal 26, they're planning to spend over $25 billion on CapEx.
$25 billion.
Yeah. They are seriously betting big on scaling up their data centers, their infrastructure to meet all this projected demand. It's a huge investment signal.
Putting their money where their mouth is.
Absolutely. And finally, they're still guiding for solid EPS growth, 17% projected for fiscal 25. So it's not just about revenue growth. They expect it to hit the bottom line too.
Okay, that paints a much fuller picture. Lots of supporting evidence there.
Yeah.
So, given all that, how are the Wall Street analysts reacting? Are they all jumping on the bandwagon?
Well, the sentiment is definitely leaning bullish quite strongly in many cases. You've got Morgan Stanley, for instance, raising their target way up to $246.
$246.
And they see revenue hitting $125 billion by fiscal 29. Then there's TD Cowen, they're even more bullish, sticking with a $325 target.
$325.
That's ambitious.
Very.
They're modeling 40% cloud growth for FY26. Mizuho is another one. They see 28% annual revenue growth through 2029 and actually added Oracle to their top picks list. So, yeah, a lot of positive revisions.
But not unanimous. You mentioned a mix.
Not completely unanimous, and that's important context for you. RBC Capital, for example, they're more cautious. They have a sector perform rating, target $195.
Okay, why the caution?
They basically point out that expectations were already pretty high. The stock had already run up, 70% in the year before this latest surge?
Right, so the bar was already high.
Exactly. So RBC is kind of saying, okay, the story's good, but maybe a lot of it was already priced in. It's a reminder that valuation still matters.
Got it. So stepping back then, looking at this whole picture, what's the big takeaway for Oracle's position in the tech landscape? Is this the war in AI take playing out?
I think that framing fits really well. The war in AI take, as some call it, sees this as Oracle playing catch-up in the cloud, but doing it aggressively, like a late but incredibly well-funded sprinter joining the race.
And the market seems to be saying, we believe you can catch up.
More than that, the market's basically saying growth is the new profit. In these huge tech shifts like AI, securing market share and becoming a foundational provider is paramount. Investors are betting that if Oracle builds this massive AI cloud capacity, the profits will follow, even if it takes huge upfront investment.
So it's not just about catching up, it's a real bid for leadership.
That seems to be the ambition. Their focus on AI infrastructure gives them a legitimate shot at leading, or at least co-leading, in that specific crucial part of the market.
But there have to be risks, right? With that kind of surge and those kinds of projections.
Oh, absolutely. And we have to mention the valuation. The price-to-earnings ratio is now up around 53.9x.
Which is high.
It's definitely pricing in a lot of future success. It means the market have enormous expectations baked into the stock price right now, and that makes it vulnerable.
Vulnerable how?
Well, some financial models already flag a potential fair value downside based on current fundamentals. If Oracle were to stumble, if they miss one of these ambitious growth targets, the pullback could be sharp. Volatility is definitely part of the equation here.
So high reward, high risk.
Exactly. Expectations are absolutely sky high. It underscores this modern market dynamic where the narrative, the story about future growth, especially in game-changing areas like AI, can be a more powerful driver than traditional earnings metrics in the short to medium term.
It's a fascinating shift in how value is perceived.
It really is.
Okay, so to wrap up our deep dive today, Oracle's recent performance wasn't really about the slight Q1 miss at all. It was a powerful statement about their future in cloud and AI.
A massive bet, really. And the market responded by saying, we believe the story, we believe the growth potential.
And this isn't just about Oracle, is it?
Not at all. It's a reflection of these huge trends. AI infrastructure, robust cloud solutions, they're becoming the absolute bedrock of, well, almost everything in tech and beyond. Understanding this, understanding why investors are chasing this future growth so aggressively, that's key for anyone tracking this space.
So here's something for you, the listener, to chew on. Oracle's clearly going all in. Massive spending, huge targets, aiming for the top in AI infrastructure. But with those sky-high expectations and the risks we talked about, does this set them up for dominance? Or could it lead to a dramatic fall if they can't quite deliver on that promise? And what does this intense competition mean for you, for businesses relying on cloud and AI as these tech titans battle it out?
Lots to think about. We'll definitely keep tracking it.
Absolutely. Thanks for joining us on the Deep Dive. We'll be back next time to unpack another crucial story.